Hey there guys, Michael here. Welcome back. I'm going to call this video day 10 part B. I believe day 10 was Fibonacci, so we're going to call this day 10 part B because we're going to go over Fibonacci again and explain it a little bit better. I'm going to try to keep it short, but also try to explain it a lot better. I know in the first video I just kind of started drawing them, and that's really what you have to do, but leaving out all the math and all the details about how these different levels are calculated. In a nutshell, Fibonacci is a tool that we can use to let's say a market is trending up. It's a tool that we can use because the market never just goes straight in one direction. It goes up, down, up, down. So it lets us draw lines to figure out when it starts to correct, when it starts to pull back, how far it'll pull back before it continues the trend. So it's a good tool to basically find entry points for the continuation of the trend. So like I said, if we're in an uptrend, we're going to be looking to long, but we don't want to long right before a pullback starts. We want to get into it kind of like kind of like when, let me pull up something here, like when we were talking about trend lines and we have a trending market like this going up. We don't want to buy into a long here. The ideal spot would be to buy in, here or here or here. So the Fibonacci retracement tool helps us determine when this pullback, this correction will stop before continuing higher. So this is an uptrend. We're looking to long, but we want to find a good entry point. So we can use this Fibonacci tool with what we've learned about trend lines. This trend line I've drawn right here. We have this trend line. We also would have maybe horizontal support lines and resistant lines. And then we can use our Fibonacci tool as well to try to pinpoint these pullbacks and where they may stop before they continue the overall trend. So look over here. I'm going to kind of show you an example of a market. So let's say we're trending up and then we have a pullback. So what you can do is you take your Fibonacci tool and you draw it from swing highs and swing lows. So in this example, here would be the low, here would be the high. So we grab our Fibonacci tool, we start from the low, we draw it up to the high, and it plots these different levels on here. And there's even extension ones, but Bitcoin loves the 0.5, the 618, anything really kind of in these, the 236, 78. Basically, the 5 and the 618 are common places that people look to either take profits, if it's, I'll just try to find an example, but people will look to either take profits or get into trades around these zones. So like in this example, we see, let's move it over so our price is right here. So we see price moved up. We drew our tool once it hit this high, and then price starts coming down. We're overall in an uptrend, okay? So we're trending up, and we're looking for like, where do we want to get into this? Price is coming down, price is coming down. Maybe it gets to the 382, and then it bounces back up like this, and then it comes back, starts to come back down again, and it hits the 0.5, and we're trying to figure out where we want to get into. Well, this Fibonacci levels act as support and resistance. And you can use them with, our trend lines. Say we have maybe a horizontal support line that we've plotted here a long time ago because it's just historically been support. Maybe we have a trend line drawn for this trend going up, and maybe, since we don't have the whole thing drawn, but let's just say it looks something like this. So now we got a confluence of several things. We have a horizontal support line. We have our trend line that we're coming down and nearing, and now we have this common area, this 618 Fibonacci level, which would be another indication of support here. And then say from here, we bounce from here and then continue the trend, and we continue up higher now. So this tool is used to find places when price starts to correct, when it starts to pull back, and we can do this the opposite direction. So let me draw an example of this the opposite direction. Let me delete all these. So we're how do I want to do this? Yeah, we're trending down, and then we correct and we pull back up. Well, when you're in the opposite direction, you draw it the opposite way. So we would draw it from high to low. So we would start up here at this high, go down to this low, and look, my guessing is almost perfect. I can just kind of spot, like where that 50% is. And these are percents. So this means this would be almost a 50% retracement, a 50% correction, or a 61.8%, or a 78.6%. So if we're in a downtrend and we're looking to short, we can draw this Fibonacci tool again to look for places where we may want to enter. So let's say it does this, kind of the same example, comes up to the 382, comes back down, and then goes up to let's just say it goes up to the 786. And then we think here, because we have a confluence of maybe we have some horizontal resistance here, maybe we have a trend line drawn here, we think this is a good spot to get in. 786 is another common retracement zone before it continues the downtrend, and we enter in, to a short right here in this area. So it's basically, like I said, a tool to figure out when price corrects, where would be a level of support or a level of resistance to get into a trade. So if we look at Bitcoin now, and you can draw these from anywhere, like let's start on the daily. We could draw it, because if we look at the daily, we are kind of like in a downtrend right now. We're making lower lows and lower highs. So let's say we draw our Fibonacci tool. Since we're in a downtrend, we're going to start from high to low. So from this high to this low, you can see that we're almost at a 618 retracement. So this area right here at 8,000, that's what we've been talking about. I think it's the exact price is about 7,950 if you're on the Bybit chart. This is the Coinbase chart. It's going to be a little bit different, but right around 8,000 is going to be a strong resistance zone. Not only it's just going to be horizontal resistance, it's psychological resistance, because people just 8,000, I'm going to take profits. It's the 618 fib and that channel that I had drawn. It's the top of that channel too. So 8,000 is a very, very important spot, and it's going to be hard. It's going to need a lot of momentum to break through that. So you can draw it on this larger time frame to see how far we retraced from the high up around 10K all the way down to where the recession started, the market crash. We retraced almost to the 618 fib. You can do it on lower time frames for every little up and down pullback. I think I have mine drawn. So I'm on a lower time frame. I drew from this low to this high. And let's see how far we've pulled back currently, or how far, kind of we did. We're kind of moving back up now. But you can see, let's move it over here so these percents are right next to it. So from the low to the high, we came to, and look at this confluence of support we had here. We had the 50% right here, support. We had our 55 EMA, strong support, and we bounced up from it. Came down again. We're back at the 50% again. We had the 99 EMA hovering right around there, bounced up from it, came down to it again, bounced up from it. And then more recently, we were trading in between the 382 and the 286. Came down and bounced off of a confluence of both the 99 EMA and the 382 fib level, bounced up from it, and now we've recently broken back up above this 236. So we're almost back up, to the 0% because we stopped retracing down. So we could draw it from here. We could go in. Let's look at a 5-minute chart. Let's do from this high to this low and see how far we've retraced back up. I gotta just move out here a little bit. So from the high to the low, we're right at, look how spot on this is, bouncing right off the 786 fib. Came down, bounced off the 50%, bounced right off. We had a strong confluence here on the 5-minute chart. Like, hell, I never trade on this chart, but still, look at this confluence of all these EMAs bunched together, the 618 fib, strong support, and we bounced up, from 7736 to 7750. So just like I was saying, you just want to start drawing these, but they're used to find good entry points on pullbacks of the overall trend. So just keep that in mind. We're trending in a direction. When do I want to get in? Draw your fib from your low to your high, or your high to your low, wherever, based on what direction we're heading in. And these levels act as support and resistance to find common areas where people either buy in, or if it's in a downtrend, where they would take their profits. So let's go back to that daily chart, what I was talking about. We have people that trade just the daily chart. That's why I like to pay attention right at 8 o'clock. For me, 8 o'clock, that's when the daily candle closes. So we have people that just trade this daily chart. And we may have lots of people, I bet, that bought in down here at this very, very bottom. Well, when it gets to the reason why 618 is going to be really important is that's a common retracement zone. People that bought in down here at this bottom and are still holding their longs for, going on 2 months, or maybe even over 2 months, from March 12th, almost 2 months. When it gets to the 618, a lot of people are going to start looking to take their profits from their long way down here at the bottom. They're holding it all the way up to the 618. And you can see when it got up to the 50%, a lot of people started taking profits there too. This long wick here, people took profits. This fake out here, people took profits. Camp here, people took profits. But there were still enough buyers. And now when we get to the 618, I don't think we're just going to blast right through this at all. It's going to have to build up some strength to really get through this, because a lot of people are going to be taking profits. So use this tool to find, let's look at these little ones from this high to this low, and let's see how much. I bet you this is about a 786 retracement from here to here, back up to here. High, low, right on the money almost, a 786 retracement. So that means people bought in down here, and when it got to the 786, they took their profits. Okay, so you can use the Fibonacci for looking for good entries on pullbacks. You can also use it for, there's what they call fib extensions. So you can see the 1 being a 100% retracement from 1 to 0. If it got all the way back up to the 1, that means it retraced a full 100%. Well, then you have these higher ones that are called fib extensions, and these can be areas to take profits as well. So I'm going to pull up the settings on my Fibonacci to show you how I get mine to look like this. You can maybe screenshot this. I remove some of these other ones off. I keep the 0, 236, 382, 5, 618, 786, and the 1. And then from there, I have the 1, 272, the 1, 414, and the 1, 618. I have extend lines right. So that means no matter how far I go, they'll always be extended. And I like that because it keeps these prices right here on the side of my screen. No matter how far I go, left or right, they're always going to be right there. So I extend them right. And then I also like to, because if you have the backgrounds on there, it just gets too cluttered. But you have this background that will kind of make a cloud kind of over each level. I turn that off. I turn off prices, and I just have the levels, and I have my labels on the right. So they're right here, not over here on the left. And I have them on the top of the line. So we can use it, like I said, we can use it for these pullbacks to find good entry points or good take profit levels. I hope this makes a lot more sense. So just start drawing this. Like I said in that first video, to start drawing it, look for swing highs, look for swing lows, draw it. If it's trending up, you're going to draw it from high to low. If it's trending down, you're going to draw it from low to high. Let's look for another example. So let's do this swing high down to this swing low to see how far this retracement was right here. And I bet you this is going to be about a 786 again, just from eyeballing it. Swing high, swing low. Look at it, right on the fucking money. Excuse my French. And then even came back down and bounced off the 50% as support and continued up. And once it gets above the 100%, you know, well, this extension now, or this retracement is done. You know, we're done with it. So the one I'm currently in, and I'm on I think I'm on the third, I drew it on the 30-minute, was this low to this high because I thought we were going to start retracing back down. We kind of did. This low to this high, and we did retrace back down. I think I did put a short in. One of my trades was a short, and when I woke up, we were near this 50% retracement, and I didn't get it exactly. I was literally just waking up and getting on the computer, so I ended up closing it up here somewhere before it reversed back up. But I entered a short, I think right as it broke through the 236. No, I entered a head short before I went to bed. I just entered a head short, woke up, had my fib retracement tool drawn, seen we were at the 50%, and was like, hey, you know, people are probably, this is a level that either is going to show a sign of a reversal probably. So 50%, 618 are just signs, or just areas where if you have it drawn from a low to a high or a high to a low, when it nears the 382 up to the 786, those are going to be strong support or resistance lines, pivot points where price could reverse. So I think this makes a lot more sense. If you want to learn about why it does the way it does, I mean, I guess you can, but just know that you're drawing it from your low to your high or your high to your low, depending on which direction the market's going, and you use it to find good entry points on those pullbacks, on those corrections. You know, you'll hear me and Drew talking about, you know, we see a correction coming or a pullback coming, you know, so when that pullback comes, you know, say you short the pullback, say, like the one I just showed you. You know, we got up here to this high, I shorted the pullback. Well, when I shorted the pullback, where do I want to take my profits at? Well, I wanted to take my profits right here at this 50% because that was a common area that it could reverse back at. So you could short the pullback, or you could have this retracement drawn to look at where do you want to get back into a long, because we know it's overall trending up. So it's pulling back. Well, we could use the 50%, we could use the 618, we could use the 786 as good spots to get back into a long to continue the trend up. So you can use it as take profits for shorting a pullback or longing a pullback. If you're in a downtrend, you can use it for your take profits, or you can use it to gauge where you want to get back into, go with the trend. So right here, you know, I'm not really looking to short. I have a couple times, but the smart way is the trend is your friend. Stay with the trend. So use this tool not to really short and take profits. Use this tool to figure out where it's going to pull back to before it continues moving up. So hope this makes more sense, guys, and I will talk to you later. Bye.